Washington Mutual, Wachovia, independent regional banks failing. We hear about this every day. Is your money safe? Should you be afraid? Well, for that question, I went to Farnoosh Torabi, author of Your So Money and senior correspondent at TheStreet.com. Hi, Farnoosh.
Hi, Alex.
Thanks for helping us break this down.
Sure.
So how can we tell if our money's safe?
Well, we know that the FDIC has provisions for us. If you're with a bank that has FDIC insurance, know that you are protected up to $100,000 per individual per account. Now, if you've got a joint checking account, that's another $100,000. And if you have an IRA or a separate retirement account at the bank, that's another $250,000. So potentially $450,000 at one bank. If you're with a credit union, also there are provisions for you, similar to an FDIC, to let you have your money protected. Beyond that, though, it's not just the money. A lot of people are wondering, what about my ATM card? What about
my checks?
Your checks?
Yeah.
And the truth is, look, if it's going to be taken over by a bank, which is what we're seeing right now, the other case scenario is that the FDIC has to relieve the bank. But what we're seeing right now, for the large part, is that banks are merging. In that case, you want to be alert. You want to be making sure you're aware of the new bank's policies. The new bank could reduce interest rates, but also the new bank is not going to screw you over, and the FDIC is there to make sure that all of our banking services are intact, that there is seamless merging happening, that the ATM machines still work. Down the road, your checks might have a different bank's name on them. You might have to experience some branch closures, but know that in the immediate period during two banks merging, the FDIC and the banks try to make sure that there is seamless activity, that the consumer, you and I, don't really even realize what just happened.
And I don't want to take my money out if I'm like, you know what, I'm too scared. What's the process that I have to go through to get my money?
Well, okay, if you want to get your money, you can just go to the bank and take your money out. You could withdraw it with your ATM. But listen, you don't want to take your money out just because you're scared or just because you fear that your money's not going to be there. Listen, the FDIC protects you. If you're getting bad customer service or if you're unhappy with the new rates that the new bank has issued, that's a more valid reason to take your money out and go somewhere else. But to take your money out and put it under the mattress, that's just, that's fear. That's driven by fear, and that's what we see right now. Tons of people down on Wall Street freaking out, trying to explain this to Main Street.
Okay, so there you have it. Don't panic if your bank fails or goes under. The FDIC will have your back. Thank you so much, Farnoosh.
Sure.